Well, good morning, everybody. Welcome to Stockradar, Stocks on the Move for another week. Today's date is the 30th of October 2025. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, well, I'm going to talk a little bit about my six-step trade setup today. It's really a fairly simple process, as it should be. Talk a bit about that in trading tactics, just to give you a broad outline of what you do to control yourself when you're trading and not trying to get distracted too much. The markets have been interesting. We've seen gold have a whack. The stocks are going higher again. Our market came back a bit yesterday, a bit of reality check, which is always a good thing for us every now and then. We don't want to get too carried away with things. But I'm going to go through a few stocks for you today just to bring a bit of reality. I've looked at some of those mining stocks. Some of them survived, some of them haven't. It's a pretty wild market, that mark. But we're going to look at a few good stocks today, and we'll go straight now to the trend intensity ratings. First off, we've got, again, another mixed group of stocks. We've got Ampol's jumped to the top there. The Cindy Centres and Stockland, which are both doing well on the property side of it. Pilbara Minerals is doing okay. Orica's jumped to new highs. Mineral Resources is doing well. Lion, Town, now I'm not too sure about that one this week. Downer EDI is doing okay. Dicker Data has been a nice little performer for quite a few months. And Worley is now starting to move a little bit there. So there's a mixed bunch for you there, as always. But we always like to have a bit of fun, and we always like to have a little bit of sensibility in our portfolio. So that's pretty good reflection there. And you can see the Eureka chart there. I think it's updated from a couple of days ago, but it is testing new highs here at the moment and looking pretty good, as are some of those mining support services stocks like Downer EDI as well. Okay, so now the stock pick update. Stock pick count is down 1 again this week, so we're just being a bit flattened off the last couple of weeks, down to 66. I think we've got to about 70, 71 at one stage. We have 1 in this week, 1 new one in, always interesting, and 3 out. So we've knocked a couple of those miners out. So that's what we've got with stock picks. So let's now go to the overseas markets. And first we look at the Dow, and these indices again are just making new highs again. So we just follow that. Volume's been solid, momentum's been good. So really nothing much to worry about there. A good new high for the Dow Jones Industrial Average, which it made back in August of this year, as did the S&P, which is also looking good, making new highs again. A nice little jump. Volume's solid, momentum's good. It seems like it's a bit of a broken record, this one, but this is what the markets are doing. And the Nasdaq jumped really well this week. So very interesting again. Some of those AI stocks are really kicking this market higher, and that Nasdaq. So pretty interesting times. I mean, we will have a correction at some stage, but for the moment they're on the ball and they're running and rolling. So we've got to make that. We're momentum traders, so we run with these momentums. But we've got to watch out when those waves come back in. I talk a bit about that in the newsletter, which is due out on Friday this week. Okay, so we go to our market, and we can see we had a bit of a drop-off from yesterday. Nothing really significant. We can see these sort of patterns have happened before. Not worried too much. The market is still in an uptrend of higher highs, higher lows. Momentum is still positive, still well above the zero level, flattened off a little bit, which means it's steady uptrend. So the ASX 200 is still looking as fine as far as I'm concerned there at the moment. Gold, well, the sellers are struck there. We can certainly see the prices come back and some pretty hefty volume last week. We haven't finished this week yet. We'll have to wait and see what's happened there. So this is really a bit of a change here. Probably not over yet. Can still recover from here, but certainly the sellers are giving a bit of a challenge at the moment. Things have just changed a little bit there on the gold market and also Bitcoin market, things like that as well. Some of those assets have changed a bit. Copper, well, it's pressuring the upside still without knocking the lights out. We can still see these high lows along here. We've got this big resistance up around here that it just can't seem to get through. We've got a bit more volume there, which is probably encouraging. Momentum's just ticking up, so I guess mildly positive there on copper. And we can see some of those stocks, some of those bigger miners, BHPs, whether it's iron ore or copper, whatever, they're starting to move a little bit there. Rio's doing pretty well. It's more of an iron ore stock, but Sandfire's also doing pretty well. So some of those stocks with a bit of a copper taint aren't doing too badly at all. And Brent crude, well, it just wallows around the lows there, a bit like the indices. They keep going up, oil keeps going down. We've had a bounce here, nothing really more than a bounce off a low there. You can get excited about it if you like, but I'm not that excited because we've still got all this downward pressure here going on the oil price. So until some of this starts to change, we've really got no real interest in holding into all stocks at the moment. Okay, so that's the indices, that's the commodities, that's where we lie with there. Not a lot of change there. So some of the stocks I want to go through with you today, perhaps a different bunch. We've got quite excited a little week or two with our miners, but this stock I just want to come back a little bit and just look at some of the good stocks and probably stocks that survive the tougher times a little bit better and perform a little bit better or don't get knocked about so much. So I'm looking at Stockland here. It's just making new highs. It made an all-time high back here. Really from our trade, we entered the trade here back here. It broke above 533. It's now above 647, so it's $1 higher. And for a property stock, that's quite good. Trend intensity rating is 10. We've got this sort of impulse drift sort of pattern, which is what I like to see when stocks are in an uptrend. And we've also got some very nice volume attracted at the moment for the last rally. Momentum has been good. So this one here, and I think also Vicinity Centres, and there's one other one, I think a Charter Hall one, which we still cover, which are all doing pretty well in that space there. So Stockland is doing okay, no problem at all. Then I think I mentioned to you Sandfire Resources before. We saw this big block here, which held it down for a year or so, but it finally broke through there about 11.20, 11.30. It's now up around $15, $16. So it's had a pretty good rally since there. We've seen some good volume, some good momentum. So it's one of those stocks, the wave is broken, it's now riding that wave out, and we've got to wait till it ebbs and starts to come back in, and that's when our stock goes off. But for the moment, the wave is still breaking forward into the shore, and it's still looking pretty healthy to me at this moment, Sandfire. So, a bit of gold, bit of copper there, pretty good space to be in at the moment. Okay, so another one here. So this is an interesting one this week especially. We saw those banks come off yesterday with the obviously the interest rate situation. So again, we've got this big situation with NAB. If I just blow this right up, and we can just see exactly what we've got here. This is the big picture, if you like, of the high back here in 2007, 2008. We've reached that point. I've talked about this before over the last few weeks. If we get through there, it's going to look pretty damn good to me. If we don't, we may well see a pullback here, and it could be a significant pullback. So we're in that difficult situation. We are along the banks, or NAB, ANZ and Westpac, not CBA, not the other ones. So we're still holding onto these ones at the moment. So we've come back here. If I just blow this up a little bit for you so you can have a bit of a closer look at it, we can just see of this trend here. We can see a bit of a sell-off back here, a little bit of volumes appear, nothing that heavy at this stage. Momentum's still good, so really is early days yet. Could just be a pullback within an uptrend, I don't really know. But we just watch this area because we are at a key resistance point for all those banks, ANZ, Westpac and NAB. Okay, so it could well be a turning point, and it may well be a blast-through situation. We can't really decide yet, but as I say, the trend is your friend, and we're on the side of the uptrend, so we're holding those positions in those big banks at the moment. Okay, then we go to stocks like Eagers Automotive, which was just really, again, a new high. We play all the new highs. Some of them don't work, and I'm going to show you one later on that didn't work, but some of them do. And when they do, whether it be Sandfire, AP Eagers, Dicker Data, whatever it is, these stocks just move. And it's a very impressive stuff. It's that big wave that breaks and the momentum just carries them forward for lots of reasons. And at the moment, we've had a bit of selling here. So if I just blow this up, we saw the new high there. We saw the break there. It's gone from $16, $17 up to about $35. That's a pretty big move. And if we look at this more closely, we can just see here two red bars, two big down weeks. Okay, so the sellers are certainly hitting this stock. But again, this week, in the face of, especially was yesterday, we see this market go higher again. So not over yet. Probably, you're just going to set your stop where your stop is, and it's going to tell you whether you should stay in this or not and protect your profit, because we do have a big profit here to protect, and it's important we do that, no matter what happens in the future. So Eagers Automotive has been a very good stock for us, and we want to make sure we hang on to it. But the sellers are there. And if I just get my little connotations there, the sellers have struck. This is still strong. It's well above the average. The high-low scenario is still there, and it's still above our stop. So we still hold this one with a trend intensity rating of +10. Okay, now another stock we haven't looked at for a while. I'm talking about safety today and about caution, certainly in times of difficulty. And we may be entering a time of difficulty. I don't know. But for the moment, Wesfarmers, it just continues high. So we've had a big trade here back in 2024, which is a nice one. It then went flat and then broke higher again. We had a bit of a wobble there for a while, but it held above our stop. And now it's driven this impulse drift pattern, which we like. And it's now looked like it's starting to want to impulse again, and I hope it is. And we could see some selling volume hit the stock here. Didn't hit it too badly, and the buyers are coming back. Momentum is still very high in the scale, which is a good thing, and it's well above the average, or it's been well supported by the average. So Wesfarmers is just one of those stocks that just potters along. And it's actually made some pretty good gains over the last couple of years, but it doesn't really knock the lights out. It just edges higher and higher and higher, and is a very good quality stock to follow. So that's Wesfarmers. So depending what you want, you can have a bit of safety in Wesfarmers, and you can have a little bit of fun with some of the miners. It depends what you want to do. But that's just one I wanted to show you because it is doing very, very well for us. Telstra is another one. Again, maybe you think it's a bit boring, but this one stock has done very well this year. It's gone flat, but really it's just refusing to go down at the moment. It needs to be very, very well supported. It's sort of trying to have another go at the moment. It's sitting above our stop, which you can see where it is at the moment. The volume here has been quite interesting, been quite strong here, as we've just edged up a little bit higher, but I guess the key at the moment is this high up around just above 506. So that's really an interesting situation. It certainly is a whole situation. Trend intensity rating is +8, so it's still strong. So you can see some beautiful volumes all the way through this big rally. Then we see a few red bars, a bit of selling to stop the gains, but this may well just be a consolidation corrective pattern. Again, impulse, drift, and we're looking for some more impulse on Telstra because this is quite a significant break here, and I think we've moved above that area here, above the $4.40 area a while ago, which is quite an important break for Telstra. So I like the look of Telstra. It's certainly a hold for me. And it doesn't matter whether I like the look of it or not, really. It doesn't matter if it's still a hold. Trend intensity rating is +8, so we hold it and it's above our stop. So that's Telstra. Again, another one is safety. One we we've been following for a little while, and it took its time, but finally arrived and seems to be attracting a bit of interest again. Now, if I just blow this up a little bit, we've got a couple of big ticks to get rid of here. Hang on, try that again. So we can see generally just through all this area here, especially this rally here, it's a good volume. And we're now starting to get a bit of volume here on these two big up weeks here. So certainly a change in the pattern for Horizon's trading action. Again, I'm talking about, these days we're talking about fundamentals and technicals, but we're also talking about behavioural finance. So we're trying to understand the behaviour of the buyers and sellers, which is really important. No matter what is going on around. And at the moment, it looks like a rise, and the buyers are certainly interested in this stock. They want to buy this stock. It's come off its low. It's created a higher low. It's broken new highs. So we've got that high low situation happening and a bit of volume. And it's coming off a very low base of about $2.93. So it's come down a long way. But we're now seeing some sort of recovery. Trend intensity rating is +9, so most things are giving it all the green light there. We've had a nice little trend reversal here. So Horizon is probably one to watch at the moment, again, in the face of other things that may be going on, which we don't like. Okay, so that's Horizon. I did mention to you Orica before. Orica is also making new highs. It came back a bit yesterday, but we're really looking for this stock now. It's moved high very well. Had a little corrective phase here. 24 is the next resistance area. At the moment, it's around about 22 at the moment, and we're seeing some nice volumes go through here, which is important. And we've also got the momentum index pretty high on the scale, which is also good. So this wave is still occurring at the moment. The demand is still there, pushing this price higher, and trend intensity rating again is +10 as of last week, when we just made that new high. So it's looking pretty good for us, Orica, and we'll keep an eye on that one, or hang on to that one. Okay, two other one stocks I want to go through is AGL, which we've looked at before. Not a lot of change happening there at AGL at the moment. It's still behaving like we want it to behave without knocking the stocks out. So every week we look at it. Sometimes nothing happens, sometimes it does. We've got to be very patient. I think Warren Buffett says one of the greatest assets of trading is patience and waiting for things to happen rather than trying to make them happen, and it's so true. So with something like AGL, someone might buy this because it's on a key low and just be hanging on to it. Someone might be waiting for a trend reversal, which I am. But all the things that can be constructive at the moment, it's just got a bit quiet the last couple of weeks. But it's holding onto those gains off those lows here. The selling seems to have stopped now, which is a good thing. So it's going through that process of trying to find a base, trying to re-attract the buyers back into this, give them a reason to buy, and you probably find the stock will go up. But still rating -7, so plenty to happen yet. But the signs are okay for AGL. And so momentum slowed, there's a bit of volume there, and it's just still an interesting picture for me. One for us all to keep an eye on and watch. Okay. Then the other one I said, I did promise you this one before, some new highs don't work. and that's a fact of life. So the new highs that do work, whether it be AP Eagers or whatever, they go higher, beautifully higher. Some don't. So our risk reward trade on new high is always very good because the potential is unlimited, but we also always know what our risk is going to be, which is going to be 15%, which we're prepared to risk. And a stock like ResMed, which made a beautiful new high up here before. Let me just get this in here. So you can see the new high it's made here. A very good new high here. Would have thought all-time high here. It broke through there, broke through $40. It continued on beautifully. Then all of a sudden, the sellers struck and a bit of volume came through here. If I can just squeeze this up a little bit more, you can just see a few red bars here. And all of a sudden, this week, we're seeing this drop off. So this one may well be failing, and we've still got the end of the week to go yet. So I always wait till the end of the week to get my signals. I don't respond to the daily noise intra-week. So we'll just watch this one, and if it closes below our stop, we're out. We take our loss and we move on. And that's a new high failure. And again, there's no guarantees in this world, so you just got to make sure that you respond appropriately. And although you might love this stock, I think it's fantastic stock, it's going back down in price, and we don't want to be in it when it's going down. Okay, it will have its time in the sun, but not at the moment by the look of it. So that's ResMed, and we're going to watch out for that one. Okay, so that's most of the stocks I got for today. Just one other one, which I went through a few weeks ago, a member request, and I think this member's probably doing quite nicely out of it at the moment, because it's really jumped through hoops. It's gone from it broke through $6.50, $6.60. It's now $10.40. So it's been a mighty move. And again, here we can just see when we see these sort of things like these volume patterns and these momentum patterns supporting such a rise, it really does look very good. It really is a wave that's come crashing into the shore and just going in and in and in. And the surf is just really catching onto this one, and he's having a great ride, and which is what we're doing. So who knows where it will stop, but at the moment, everything is very positive for this one here for Silex Systems. Not one that we cover normally, but we'd like to go through a few small ones, as I will do in the newsletter this week. I'll talk about that in a second. But that's Silex Systems for the moment, and that's looking very good at this stage. Okay, so I didn't mention to you, okay, so what's happening at Stockradar? The newsletter is coming out on Friday, which is tomorrow. The new format newsletter, I've got 6 stocks that we're looking at today, a few minors there, another big stock looking very interesting. And then I go into my Radar's rant, and I sort of talk a little bit brutal sometimes. Don't be a minnow, take the world by storm, be real, factual and honest. And I'm talking a bit about behavioural finance, behavioural analysis, and how we work and how we think, and not to be too silly about things, but really take a bull by the horn and go for it when things are right. So understanding the realities of behaviour in finance is very important, and there are some good tips I give you in this article just to keep you on the straight and narrow, and not to worry too much about things that don't matter. So that's an interesting article for you to have a look at. Then I go into 3 exciting small caps, which I think are very interesting at the moment, and it's certainly worth watching. So that's in the newsletter for you this week. So you can always take a free trial of Stockradar, see what the trading centre's doing, see where my stops are, all the sort of things. So feel free to do that, and also feel free to subscribe if you want to. So we always like new subscribers, we always like new people coming on board and enjoying the fun, because that's what we try and do at Stockradar, have some fun, get on some stocks like Silex Systems, and enjoy ourselves, because trading should be fun and it shouldn't be stressful. So that's really the way I look at it. Okay, that's all I need to say on that one, I think. Okay, so trading tactics, just briefly, I talked about the 6 trade setups. Okay, so it's really a very simple process what I do, and I only focus on 4 or 5 things, or 4 things really. The price action, the moving average, the volume and the momentum index. That gives me all I need to make a decision on whether I'm going to buy or sell a stock. Okay, my primary filter is, of course, high highs and high lows. And if it goes in lower lows and lower highs, I don't like it very much and I don't want to be in that stock. So that's really one simple filter that I start with. But firstly, I have my setups ready, whether it be a trend reversal or a new high. And when my trigger is hit for my Trojan stops, if the trigger is violated by Friday's close, which, as I said before, I'm not an intraday trader. I don't look at daily noise. I only focus on Friday's close, and I look at that compared to where my stop is or my reversal point is. So that's number 2. That gives me my signal. And then my third point is I then just simply buy and I set a stop with my risk limit parameters, so I know exactly what I'm risking, and there's nothing complicated about that whatsoever. Okay, so my weekly trigger level is set. It's violated by Friday's close. I then buy with a stop. My next 3 steps are each week I monitor the trade. Okay, I review the stop and I reset my trend intensity rating. My trend intensity rating is important. It tells me how the wave is breaking and how strong the wave is. But the most key important is where my stop is, as to whether I'm going to make a profit or a loss. Okay, so then I will raise my stop if the price rises. And the stop will never ever move down. Okay, so I never move my stop back, but it will always rise with the stop. Some weeks I may not move it, but some weeks I will move it, and you can see how I do that in the trading center. Okay, and then the stock eventually the stop will be triggered, whether it be APE coming off its highs or ResMed coming off that new high failure. Once my stop is triggered, I exit. I then move on to the next trade, and all that is past history, gone, finished, no more. I don't worry about it. I just move on and keep my mind fresh and clear for the next trade, because there's always new trades. I cover 160 stocks, which is way too many for any retail person, but it's enough for me to provide a service for you. But don't try and cover all those stocks. Because you can't buy them all. Just keep it all limited. Limit your data universe and limit your portfolio holdings, and you'll be okay. You keep control of things that way. So once my stop is triggered, I just simply exit and move on. Profit or loss, I don't mind. I take more profits and losses, and that's the key thing that I do. Okay, so I just want to talk about the very simple steps that I take, which are not complicated, and it just does not have to be complicated. Okay, so just try to remember that. 6-step trade method is very, very simple. You may have seven steps, you may have 5 steps. It's up to you, but just follow those steps and you'll be okay. All right, that's about all I've got today. We've got an interesting market again. What's happening with gold, we don't know. The indices are still making highs. There's still some great stocks running out there pretty well. Some of the big miners are starting to move. Rio's looking very interesting at the moment. So there's lots of things to watch and look at and have a bit of fun with. So just to finish off, as I said before in my 6-step trading method, trading should be simple, easy and fun. Okay, it is when you follow a process, which you can. It's just, if this happens, I do that. If that happens, I do this. It's a really simple process. So when markets are hot, it's easy to make money at the moment. It has quite easy to make money, but it's not always like that. Okay, so we've got to make sure we observe, we understand what the behaviours of the market is at the moment. There are certainly certain sectors moving, some aren't, so we've got to understand that as well. But really it's a matter of understanding at the moment the market is in a buy mode and it's quite easy to make money, but when it does change, you've got to be aware of that, because it's quite easy to lose money if you are not careful. Okay, so the important thing is to watch your trends, heed your stops, keep it simple, have fun, stay safe, and I will see you all next week for another round of Stockradar Stocks on the Move. Thanks very much.